The markets just got hit. Not with one, but with two brutal shocks. Hotter than expected inflation and the surprise confirmation of Trump's sweeping auto tariffs. Within hours, the S&P 500 tanked, the Nasdaq plunged nearly 3%, and the bullish rally everyone was banking on vaporized. But is this a short-term shakeout or the start of something bigger? In this video, we're breaking down exactly what happened, what it means for the S&P 500, and why three of the most talked about stocks, Nvidia, Palantir, and Tesla, are now at major technical turning points. And stick around because there's one chart I'll show you later that could completely change how you see the market. Friday, March 28th, a day traders won't forget anytime soon. The S&P 500 dropped 2%, the Dow fell 1.7%, and the Nasdaq, it took the hardest hit, down 2.7%. That capped off a red week across the board. It wasn't just technicals, it was a fundamental 1-2 punch. First, the Commerce Department's core PCE data, the Fed's favorite inflation metric, came in hot, up 0.4% month over month. That's not what Wall Street wanted to see. It slams the brakes on any near-term rate cut talk. Then came the second hit, President Trump confirming a 25% tariff on all foreign-made automobiles starting April 2nd. And that's just the beginning. Tariffs on steel, aluminium, even pharma are now officially on the table. This isn't rumor anymore, it's real policy, and it's sending shockwaves across sectors. So the million-dollar question, is this just a flush or the start of something deeper? And more importantly, how do we trade it? To answer that, we need to zoom in on three stocks at the center of it all. First up, Nvidia, the king of AI. It started the week strong on tariff speculation, but Friday's sell-off dragged it down. Let's zoom out though. Nvidia surged over 1,200% off the 2022 bottom and split 10-for-1 last year. But since last June, it's been moving sideways. That's not weakness, as is often reported. It's strength in disguise. The longer it coils, the more explosive the move. Think spring-loaded. However, until the move happens, the challenge is sitting through these swings up and down, which is what price action does in a sideways market without panicking. We've held Nvidia since early 2023, and we're ready to add more into the portfolio. But to do that, one signal we're waiting on, a breakout above resistance and the current all-time high. Until then, well, it's sit tight. Let the chart talk. Okay, next up, Palantir, one of the hottest AI plays of Q1. It jumped over 25% from the March low, but gave some back on Friday. Typical growth stock behavior in a macro pullback. But here's the real story. Palantir broke out of a 4-year base last November, rallied over 175% by February. This current pause, it could be the setup for its next leg higher. Like with Nvidia, we're watching resistance. If it breaks above its all-time high, that's the signal to buy. If not, we wait, because patience isn't passive, it's strategic. Then there's Tesla, probably the most divisive stock in the market. It rallied nearly 30% of March's low, but Friday hit hard, down 3.5%. But here's what's tricky. It's still down over 40% from its all-time high. And technically, it's stuck, going nowhere fast. Since 2021, Tesla's been range-bound, no real structure. Until it builds one, we're on the sidelines. But if momentum returns, well, we're ready to act. Here's a pro tip for you. Elon Musk's headlines, whether about politics or China, may create short-term noise, but they don't shape long-term trends. If you want to learn how to spot long-term trends and take advantage of and profit from big market moves, download our blueprint. It outlines a simple process you can start using in your investments today. You can find the link in the description below. Now, big picture, tariffs could actually boost domestic manufacturing. That means more spending on infrastructure, more local jobs, and a shift towards US-made goods. If that happens, US-centric stocks like Nvidia and Palantir could benefit, especially if Trump backs it with corporate tax cuts or incentives, both of which are already in discussion. But the flip side is tariffs raise import costs. Even US manufacturers rely on global parts, and retaliation from China or the EU, that's a real risk. We're already hearing reports of rising steel and aluminium costs. Supply chains could slow, consumers feel it first, investors feel it next. This kind of uncertainty can easily spook investors. Capital could flee to bonds or gold, which is why we're seeing a rise in gold as we speak. Right now, the market is correcting. Indices are pulling back. Sentiment is shifting. But remember, every big trend is born out of these moments. So instead of reacting to every headline and panic post, focus on price structure and momentum. Look for stocks that are forming solid bases after big runs, like Nvidia and Palantir. Those are the names that often lead the next wave higher. So here's the bottom line. Moments like this, full of fear, volatility, and noise, are exactly where the next big trends begin. But the real edge isn't just spotting volatility, it's knowing which stocks have the structure, strength, and setup to lead when the dust settles. And here's the hard truth. Most traders don't know how to do that. They chase hype, follow the headlines, and end up picking stocks that actually go nowhere. In fact, 99% of people consistently choose losing stocks. But in the next video, I'll show you exactly why that happens and, more importantly, how to fix it.